What's up everyone, it's Karthik with MoneyVest. Welcome on board for our Market Open live stream on these New Year's special live streams for the next 3 days as we are closing out the entire year of 2025 and getting started with 2026. Hope you all are doing great in the final stages of this year and are ready to close strong. And if my audio and video is good, just give me a thumbs up. I just want to make sure there are no technical difficulties. And once again, good morning, everybody. Thank you so much for joining. We're very, very excited to have you on board here. Markets are indeed pulling back. So QQQs taking a little bit of a dump here, 67, 68 basis points lower. We got S&P 500 down almost 0.5% with the Meta platforms now at 659. So those covered calls, as we know, are going to do well. They're going to print once again. And we've got Nvidia stock also slightly down about 1.3% at the moment. And we've got volatility as expected. This should not come as a surprise to anyone, right? We've been talking about this on the channel for quite a few days now. It's up over 10%, trading back to over 15 right now. So we talked about volatility. We talked about the MoneyVest index. We talked about the fact that we're sitting at all-time highs. And so it's not a question of if, it's a question of when volatility is going to spike. And right now we're seeing it up over 10%. So again, good morning, everybody. Thank you so much for joining. Please, please, please do me a favor and share this live stream with as many people as possible so we can have more and more people join us. So I'm going to share the link of this live stream. Definitely share it with your friends, family, other traders, investors, so we can have more people join us and have a good engaged discussion for the next few minutes here, 45 minutes, however long we're going to do this live stream. So thank you so much. And I'm going to take all questions, fundamentals, technicals, options, psychology, macro, recession, everything we're going to discuss. Throw any questions at me and we'll take a look at it together. So hope you all are doing great. So good morning. Good morning, everybody. Mike, thanks for joining. Kevin, good morning from Florida. Good morning, money investors. Good morning, everybody. So yeah, pre-market, we're seeing a little bit of a pullback here. So a bit of a prolonged sell-off as QQQs right now are selling off a bit more aggressively. And we've got S&P 500 also dropping as volatility continues to spike higher. And if you come take a look at silver prices, there is a big dump, about 8% sell-off after actually hitting all-time highs of well over $83 a barrel. We're seeing a pretty substantial dump in silver, down over 8%, trading down to under $73 a barrel. And we got gold prices also retreating quite aggressively, down over $4,400. That's where they're trading, down over 2.6% in trading right now. So we're seeing a pretty substantial pullback in commodities, in equities, and even crypto is struggling at the moment. So we got Ether trading sideways a little bit under $3,000, and Bitcoin also more or less flat. There's not a lot of volume. There's a lot of consolidation sideways for Bitcoin as well. So did I say barrels, Mike? So sorry. Ounces, $72, $73 per ounce. It's hard to kind of always remember those unit economics because oil prices measured in barrels, commodities, precious metals measured in ounces, and of course equities measured in shares, crypto measured in coins. It's always confusing, right? So when you're looking at a lot of different asset classes, it becomes a bit more challenging to remember all the different units for all of that. So yes, are you enjoying the food and flavor in India? Absolutely. One of the reasons why I love coming back home always is the fantastic flavors, the food. Although the pollution's a little too much. I mean, the AQI in Delhi is quite bad, to be honest, and I'm already starting to feel a little bit of breathing and some, allergies. I'm sneezing a lot. I mean, it's just, it is those challenges. But yes, the food and the convenience, home-cooked food, home-cooked meals are always, always appreciated. So that's always fun. So yeah, I mean, a very, very happy, almost happy New Year's to all of you. I mean, 2025 has been an incredible year, knock on wood, and expecting it to close strong with some proper risk management last 3 days. Even though we do see a little bit of a pullback, I think in January, and again, I'm not one for making predictions, but I would not be surprised that going into January 2026 that we do see a bit of a pullback or a correction because, look, volatility has been extremely low. I mean, we've been dealing with some pretty low volatility levels. And, if you come back to our spreadsheet here, we've talked about this on the channel. It's not a surprise and it should not come as a surprise to anyone. We're looking at VIX at under 14, right? So 13.91, sitting down at 25th percentile. And if you were to compare this to, let's say, less than 10, which we were very close to, that's less than 1% of the times we've actually seen that, right? Only 68, 69 occurrences in the last 30 plus years, volatility has traded below 10. So, if you've been part of the channel, you've been part of our Discord, our community, you've been watching the content for the last, let's say, a few days or a few weeks, even if you are new, these are our guiding principles. This is literally what we look at and nothing else. What's going on in geopolitics, what's going on with the trade, yes, it's important, but it's not the indicator to be making decisions. It's good to know, it's good to be aware, but it's not what we use to make decisions. What we use to make decisions is literally quantified and math and probability based. It's actually statistics guiding our decision making. It's not qualitative analysis, not what Trump's going to do next. It's not what China's going to do next. It's not about what's going on with trade policy or with geopolitics. None of that. We make our decisions based on the data that we collect because at the end of the day, everything is going to filter down into numbers. Everything. Almost every piece of news is going to get filtered down into numerical quantified data. And that's what we use to make decisions at the end of the day. So yeah, keeping a close eye on volatility. It's not a question of if, it's a question of when it's going to spike. And it right now is already starting to move higher, 10% higher as markets are pulling back. So exactly one of the reasons why we need to be prepared. We need to be cash ready as markets are also rolling over a little bit. If you get those deals, great. We're going to be ready. If you don't, that's also fine. Mostly invested, want to capitalize on that upside as much as possible. And when the deals and the discounts do come to us, we're ready to take advantage of that as well. So that's where we are. And good morning from Florida. A lot of people joining from the sunny side of Florida there. Hope the weather is better. Hope the weather is getting nice. I'm sure it's getting a lot colder in the East Coast and, of course, in many parts of the US and Canada. But I hope it's a little bit better down south in Florida and other parts of the US. So let's take a look at Iron and Netflix. And when did you start your journey with the stock market? Thank you so much for that question. I started about 11 years ago. So it's been just over a decade that I've been investing and trading for myself. Started when I was 18 with a simple Vanguard account with $3,000 in it that I earned by working in school, internships, and just summer jobs. And that's how I got started. Made a lot of mistakes, almost every mistake in the book. Learned the hard way, got frustrated, got super angry at the markets. And that's really the beauty of the markets, is that it actually teaches you more about yourself than anything else in the world. Like when you are trading, when you are investing, you learn a lot more about yourself than any other career, in my personal opinion. No other career, no other endeavor, no other journey that you can be on that you learn more about yourself, because it will trigger all those emotional cues: greed, fear, risk, anxiety, stress, volatility, everything. Everything is going to get triggered on some level, and that's how you learn about yourself, how you manage emotions, how you manage risk, how you manage money, everything. There's no filters. Everything will be transparent and in the open. And so that's what you have to master. That's why some of the most intelligent people will not be successful in trading, may not be successful. It's not, IQ has nothing to do with how successful you can be in the market. If you are somebody who is emotionally intelligent, or somebody who can manage your emotions really well and is somewhat a little bit more elevated on a more psychological level, then you can do significantly better than someone who might have a higher IQ. So intelligence has nothing to do with how well you do in the markets. There's a lot of other factors as well. So yeah, awesome weather in Florida. It's paradise here. Perfect. I honestly love Florida. The last time I was there in Tampa, I loved my time there, and I can't wait to go back. I think it's a fantastic place. Definitely want to go back and enjoy some more time in Florida. Love the beaches. Love the entire vibe. And so yeah, can't wait to go back. Anyway, coming back over to iron, let's talk. It's down over 3.7%, pulling back because again, a lot of pre-market stocks are selling off here. Support level is going to stay put at 33.50, closer to $34, $33. So this right here is going to be that area of support, and we've got a bit of a resistance here for iron. I do have the iron calls, $55, which are going to most likely expire out of the money. We'll close those. I've got the NVIDIA 187 calls expiring in about 20 days or something, January 16th, that are now going to be very close to the money once again. And then, of course, I've got the popular Meta covered calls at 665. That is going to most likely, once again, be very positive at the open since it is back below 660. So I've been playing this game for Meta covered calls for the last 3 weeks now. And with a little bit of skill and a little bit of luck, I've come out ahead on these calls every single time. And so we'll find out how these calls do, the 665 calls. As soon as market opens, I'll see how much they're up. And then we'll go from there. My plan is to continue trading the wheel strategy on Meta and continue to milk as much premium as I can from the 100 shares that I have on this stock. So that's the plan. Coming over to Netflix. Netflix also has been under a tremendous pressure. It's been selling off aggressively. And for the most part, consolidating sideways. We got a support level sitting roughly $92, $93 and a resistance all the way up to 99, close to $100 for Netflix. So that's where we are. Folks, make sure that you share this live stream and like it as much as you can. I would really mean that a lot to me because I'm doing these public live streams for the New Year special for the next 3 days because I really want to close the year strong with all of you and then really map out what 2026 is going to look like, because it's important for us to have these sort of bigger annual meetings because we can plan for the years ahead and also recall all the mistakes made, all the lessons learned, kind of reflect on 2025 or that year and then plan for next year, because that is where most of that growth comes in once we start holding each other accountable for the goals and the targets we've set for each other and also reflecting on the mistakes we've made, because that is how you grow, right? Is when you're honest with yourself, you're true about what your strengths and weaknesses are, and you work on those weaknesses to turn them into strengths. So the best part about this is that we have each other, right? So we can kind of talk through it. We can have different perspective and discuss different strategies, different ways of maximizing opportunity, minimizing risk as much as possible, and learning from each other's perspectives. So the more people we have, the better the discussions, the higher the quality of those discussions. So please do share, drop a like. I would appreciate that a lot. I'm visiting family in Ohio. It was 65 degrees last night. This morning it's like 25. That's a huge drop in in the weather. That's crazy. That's more volatile than the VIX. Absolutely wild. SK Hynix looks good for 2026. Better company than a Micron. There will be an SK Hynix ADR soon too. We'll look into that. Thank you so much for sharing. John, mistakes costed me lots of money. So we're here to help you through mistakes, right? So as I mentioned before, when it comes to sharing mistakes and sharing things that did not work out, this is a no judgment zone, right? So we're a very, very safe community kind of helping through those problems. That's what we're here to do, because I was talking to one of the other members the other day, and they were like, you know what, I'm not very comfortable talking about my portfolio with my family and friends. So this community is a very good way for me to kind of share what I have and what my plans are. And that's what it is. Think of us as like your finance family, right? That's what we're here to do, because we're all in the same journey with the same mindset, and we're here to grow together. So we're not here to judge. We're here to tackle the problem head on and solve it. And so I've got a list of things I need to work on in 2026 with my trading and my investing. So I'll share that with everyone, and we'll work through it together, because the whole idea is every year you want to get better. Every year you want to get better. You want to grow more. And so that's the whole idea. All right. Questions. We got 30 minutes until market opens. What are your questions? What are your burning questions about the market, about the different stocks that we're looking at? If you want to look into options chain, we can look at that. If you want to look at technicals, fundamentals, commodities, gold, silver, crypto, real estate, macroeconomics, whether there's going to be a recession or not, what are your burning questions? Let's talk about it. So let's hear it. Any specific stocks, anything you want to ask, let's do it together and And yeah, I'm happy. I'm happy with this year's performance, to be honest. It's a good year. It was 15 degrees recently in Boston. Trust me, go to Florida or Texas. Yeah, my family's visiting from Boston. And yeah, I mean, obviously it's very cold there right now, this time of the year, snowing and cold. So I had a family member lose their at me talking about the market. They think it's straight up gambling. Happy to be a part of MoneyVest community. Yeah, I mean, a lot of people kind of view the markets as gambling, but it is just about risk management, right? That's really what it comes down to. At the end of the day, it is about risk management, because if there is a market that you don't know anything about, it might feel like it's gambling from the outside looking in. But I've realized the more you know, the better your edge becomes, right? Pretty self-explanatory, but it's really just kind of opening up to new opportunities and listening to other perspectives, to having a grip on how things work and how you can actually game the system, right? Where the edge really lies. I think that's really what it comes down to at the end of the day. But being too closed off from the outside looking in will always feel like everything's just a sham. It's all gambling and whatever. But yeah, but here our goal is to break everything down in simple ways. All right, let's take a look at Duolingo. So DUOL. And this stock also has been aggressively selling off from the breakdown of this head and shoulders. We talked about this on the weekly chart, lower highs and lower lows with a little bit of a neckline, huge breakdown. Support level now is going to stay put at 172, 173 with a very strong resistance. It's going to stay put around $200. A lot of consolidation. If it does break down further, if there's any more downside from here, next support is going to be down in the 140s for Duolingo. So that's going to be that next support. Any thoughts on QuantumScape, any future? So, when you're looking at companies with a potential future, one of the things that I always have to ask myself is, how big is the market that they're operating in? What is their moat? Is it defensible enough, right? Is the moat actually defensible? Do they have a competitive edge, right? And the third is the management. Those 3 M's are the starting point, and then you kind of filter it down to the fundamentals. And is there a path to profitability? I mean, QuantumScape has given me no indication that they are a company that can actually generate good revenues and has a path to profitability. None, zero, right? Look at the last 5 quarters. Huge losses, little to no revenue. And it's just a company that's trading on more hype than anything else. $6.5 billion business, descending triangle, strong support at 1060. If it breaks, we're looking at 740. Resistance all the way up to 1840. It's gotten through multiple cycles of short squeezes and this buyer momentum and euphoria, and it's just crashed back down. I mean, this right here was a sell-off of over 51%. This right here right now is going through another 45, 46% sell-off. So it really is a process where we have to continue to monitor the future earnings and see if there is a path to profitability or not. If fundamentals are improving, if not, I would just look for other opportunities. What do you think silver will peak at in 2026? So, kind of hard to say what that peak is going to be. Right now, we're already seeing a big technical, pullback here after getting extremely overbought. And even on the weekly time frame, the RSI 78, 79 is trading up to as much as 91. So, it's kind of hard to pinpoint exactly what that bottom or that peak is going to be for anything, really. The difference between equities and then commodities and crypto is that with equities, you can at least have an idea of the valuation, of the fundamentals, of the cash flows, and you can price the business. With commodities and crypto, there's nothing. I mean, it's not like silver is generating any stream of income or cash flows that we can discount and figure out, okay, what's the appropriate valuation? None. These are things that are purely driven on the basis of demand and supply. If there's a massive shortage, if there's an abundance of demand, prices continue to rise, and it's hard to really figure out, okay, where's that next peak going to be? You could technically draw a Fibonacci sequence and try to understand that, okay, if I take the bottom, the swing low of 2022, and put the swing high at the near all-time high, we have the 68 or 23.6 level around 67, and then I've got the 38.2 level around 58, and then I've got the 50% level at $50. So if you do see any of those pullbacks, those are the 3 key levels to watch from the swing low and to the swing high. But fundamentally, it's almost impossible to really try to predict where that peak or that bottom is going to be for anything, right? Let alone silver. I heard from one of the family members during Christmas dinner that stock market is like gambling. I just said that it seems like gambling to someone who does not know what she is doing. Yes, 100%. And that is very true. And, it's also in a way very, very sad, or I would say like it's also quite depressing, because investing is one of the only ways you actually build wealth, right? Think about it. There's no other way that you can actually build wealth other than investing, right? Or having your own business, right? You can have really just two ways, because it's very rare that you save yourself up to multiple millions, right? It's only through the vehicle of investing, either in a business or in the stock market or in real estate, investing in general, like is the overall vehicle through which you build wealth. And if you don't invest because you think it's gambling, then you're really kind of withdrawing yourself from huge amounts of accumulation of capital and wealth over the long term. Because people who are investing versus people who are not, you're not going to see the difference in the first 2 years, 3 years, may not even be in the first 4 to 5 years. The real difference starts in 6, 7, 8 years, and it just explodes after year 10 of investing, because that's when you start to see the exponential growth. So it's not linear. If two people, one is investing, one is not, it might feel the same in the first couple of years, 4 years, 5 years, but that discipline, that consistency explodes after multiple years, right? Because of that exponential growth, because it's all parabolic. And so, for me, I've always encouraged people to invest, in themselves, in assets, in income generating assets. Just keep investing in assets. That's the most important thing, whether that's stocks or real estate or options or bonds, or whatever. Investing is the only way that you build wealth. And obviously the wealthy and the rich people actually know that. It all comes down to building assets. So I would always encourage people to do that. I know you talked about NEO. I'm under 25K negative. It's so tough to bite the bullet. Any thoughts, Abhishek? So yeah, it's hard, because, we talked about NEO quite in detail in our last live stream as well. The way I always explain this to people is, it's okay to make a mistake. It's not okay to stay in a mistake. And so it's most important is to realize when things did not work out and, let's say you made a wrong decision, but what hurts more is not the wrong decision. What hurts more is the missed opportunity if you stay in that wrong decision. So whatever capital you have left in that position, that's dead weight if sitting in that same stock. But if you take it out and you put it into another opportunity from the lessons you've learned from the first mistake, and you don't apply them and you apply a different strategy and you actually grow that I think is moving the needle towards your future, towards growth, instead of just like sitting in this company. And that's the decision I made with PayPal. I was like, okay, you know what? I'm done with this. There's a lot of opportunity cost of my capital just sitting there. I'd much rather take it all out and reinvest it elsewhere where I do find better value. And so it's not one mistake that we make by sitting in a wrong stock. It's two mistakes that we're making simultaneously. And so we still have the time to avoid the second mistake. And that's why I always encourage people that if you don't believe in the stock anymore, if you don't believe in the company or the thesis and you're down, bite the bullet, move on into something else. Because if in your investing journey, if you pick 10 stocks, you're not going to be right on all 10. You're lucky if you're right on 6 or 7. So there's going to be a few bad apples with everyone's investment portfolio. It's almost impossible to be having a 100% win rate. So that's why it's so important to get into investing and trading, knowing that you're going to be wrong. Sometimes you could be wrong a lot, but the idea is to lose less when you're wrong and make more when you're right. So, okay, moving on. Between Palo Alto and Fortinet, which is a better stock pick? I think Fortinet's a bit more stable. Palo Alto has a bit more growth potential because, it's just turning the corner towards profitability. As you can see, the last couple of years have been very profitable. Margins are expanding. So it is a high growth, high valuation company here, Palo Alto. So very strong growth coming in since 2020. The stock is up over 800% since 2022. Bear market ended 190%. Fortinet is, I would say, a bit more stable in terms of company fundamentals, and also it is down quite a bit from its all-time highs, right? So from 114, it's down about 30% in a bear market. So a lot of consolidation sideways. So I'm also considering $72, $73 puts on Fortinet. So that's a strike that I'm actually watching for Fortinet as a potential strike put. What do you think about Meta platforms in 2026? I like it. Meta is a position that I do believe in long term, as they are dropping the metaverse budget, and the earnings bump is going to be pretty significant from that. Wall Street starts to cheer back as they are focusing on AI and advertising in their core business again. And so that's why one of the reasons for me was to accumulate 100 shares, to start selling some calls, to collect some more premium, lower my cost basis, and I'm going to keep doing that until it starts running. And for the last 3 weeks, it's worked out pretty well as it continues to stay below 665. Hi Karthik, what are the tips to roll a covered call when it's in the money? Example, Nvidia covered call 145 expiring in March, costs around 111. So the idea really is to roll, as soon as you get it in the money, is to roll, and keeping your rolls between, obviously you have to balance it out. You have to find the happy medium where you're not rolling too far out, but then you're also rolling far enough that you're able to move up your strike for a nice net credit. So the idea is that, okay, you want to move it back out of the money so you can capitalize on that upside. And you're collecting a little bit of net credit along the way. So that is the entire idea behind rolling options. And so I like to do it when I'm in the money or I'm about to get in the money. So in your situation, 145 is very much in the money. So I would start looking into rolling option. But then again, March is the expiration. So you've got about 3 months. So you can maybe wait another month or two and see how Nvidia trades, and then decide you want to move it another 2 months or 3 months. All right. So Jojo, my boys are grown, but for those who have little ones, what are your strategies on financial education, how to get them started? I think that's a great question. And, I'm not a parent yet. So I'm not going to be the best person to kind of talk about this. I think other parents in our community who have kids would be the best resource, because I have ideas on what might work. But as I said, I'm not a parent. And so I don't have firsthand experience of helping kids learn about financial education. So so that I can share my ideas on what I think might work, but it would just be ideas. It would just be theoretical. It would not be anything practical per se. But I'm sure there's a ton of parents in our community. And that's something that we're working on as well, is kind of like a separate section, like MoneyVest Kids, where, we can have a good discussion of parents on what strategies they're using to encourage their kids to learn more about financial education, investing, all those things. Because it's easy. The easier part is to give away your money to your kids. That's the easy part. What is the hard part is imparting your knowledge and the experiences and the things that you've learned about the market over to your kids. And so that's the tough part, and that's what we need to tackle if we are to leave all this wealth to them in the future. So something to think about for our community. Absolutely, 100%. That's something that we're working on. All right. I know CME is increasing margin requirements today on silver as well. Silver and gold aren't commodities. They're the currency. And there's one way to look at it, right? So at the end of the day, you can look at it as a commodity because it's used in many industries, right? So silver and gold have many properties, which are very important, physical properties that are used in other industries, semiconductors, EVs, technology, solar panels, things like that. So yes, at the end of the day, it is commodity, but you can also look at it as a way of currency, right? Because at the end of the day, if the fiat currency goes down in value, we go back to the old ages as gold and silver being a very significant mode of payments. And so as a result, you could technically, I guess, look at it as a way of currency as well. Karthik, you're 100% right. Few people around me understand the stock market and investing, why investing can be safe and done in a logical way. You have to understand that the market sometimes corrects you and you have to survive it and even buy good companies when there is a sale. 100%. Absolutely. And there's so many nuances to investing because it's not just about investing to make the most return. There's risk, there's liquidity, there's risk tolerance, there's management, there's time horizon, opportunity cost. Everything needs to be studied. Everything is part of your analysis. It's not just, oh, what is the next big stock that I can buy that's going to make me money? No, there's a lot of more sophisticated discussions that need to be had like around it. So my input on SoFi. So SoFi is, for me, a long-term stock. Will continue to be that way. So a lot of consolidation sideways, as you can see. Resistance is going to be closer to $30. Support level is going to stay roughly at 25. I'm planning on maybe selling some puts at 25. Inside this green rectangle is where the support is going to be. Looking over to HIMS, a lot of consolidation sideways. Resistance $40. We got a support level that's going to stay up at $33, $34. Is HIMS still considered a heavy buy now, or what are these support levels for now? So, $33 is going to be that support for HIMS. Resistance all the way up to $40. It seems to be getting rejected at $66, $72, like a quadruple resistance there. We're getting rejected time and time again. And then another place where we're getting rejected at roughly around $40. So yes, it's still a high quality stock, but again, it's going to take some time to get going here, I feel. Thoughts on Netflix long term? We covered Netflix a little bit earlier. I think it's coming down to some pretty attractive levels since it is down quite a bit from its all-time highs, 30%. Resistance all the way up to $99, close to $100. And long term, I remain optimistic on Netflix. It's just that they do have a pretty significant cash flow burn, right? Which we have talked about in the past, is that it's a very cash heavy recurring expense business and they have to keep it going, right? Keep creating content, keep having more content on the platform to keep having retention, encouraging more people to join. So things like that. Thank you, Karthik. Glad to be a part of this group. Abhishek, thank you so much. I appreciate you and I'm glad you're enjoying your time here. Santa doesn't care about this market. It's a pretty red market today. I'm happy to might even continue for the next couple of days or next month. The idea is that when those deals come in, we're ready to take advantage. So, okay. Teach kids to save a percentage of their allowance. Open a high yield account where interest is earning. Teach them the 50-30-20 rule. 50% to spend, 30% to save, and 20% for charity. Great starting point. I think that's a great way to put it. And yeah, I mean, there's a lot of different strategies in different ways, right? You can encourage kids to learn about financial education, investing, markets. And for me, it's really about having them think for themselves when it comes to money and markets. Because that's what's going to help long term is that they solve problems themselves. They are able to critically think about these issues and make sense of what is a more rational approach and then what is a more emotional approach. So super important, all of that. BM&R hurting. The best way to teach your kids about money and investing is first to do it yourself using examples like famous lemonade stands. Perfect. And they need to understand first how business work and then you advance 100%. I have a master's in finance, but still stuck at making the first move. I'm here in Australia. Any good places to start with? Any no-brainer buys just to get my foot in the door? Aksh, you're asking about stocks, right? Any good places to start with and no-brainer buys just to get my foot in the door? For stocks, I mean, we have our entire shopping list there, right? So you can pretty much access it at moneyvest.com and pretty much take a look at what makes most sense for you in terms of fair value, light buy, heavy buy, no-brainer buys, and what valuation makes sense for each company. But if you're asking more specific to the career guidance, it really depends on what within finance you want to do, because there's the entire discipline of finance is quite broad. I mean, there's a lot of things within finance that you can opt for and get experience in and start to kind of pursue. So it really depends on where the interest lies, and then obviously go from there. But yeah, happy to help. You can email me at admin@moneyvest.com and we can even get on a call and I can help as much as possible. I'm from Canada. What's your view on TFSA? Should I maximize my TFSA first before opening an account and doing options? 100%. As far as I know, TFSA is indeed a tax-free account in Canada, which is very similar to, so tax-free savings account in Canada, registered account letting you save and invest money, where all growth, interest, dividends, capital gains, and withdrawals are tax-free. You 100% want to take advantage of this. Like, why wouldn't you? You want to maximize this, contribute as much as possible in a given year, depending on your limit. And anything over and above is what should go into a brokerage account, which is taxable. So very similar to the Roth IRA or traditional IRA. You want to maximize that first and then move on to something else because it's tax-free growth. You also want to optimize for tax, right? You don't want to just optimize for returns. You also want to optimize for withdrawals, for spendability, for usage, because at the end of the day, like it's that all those factors are very important too. What good is all your returns if you can't use it or if you have to pay a big tax on it? So we want to optimize for all of that, for all the tools that are given to us. So please share your thoughts on APLD and TTO. So Applied Digital, we have covered in the past, continues to trade inside the symmetrical triangle, as you can see. So lower highs, higher lows, consolidation sideways, kind of coiling inside this symmetrical triangle with a resistance up to $29.30, and we've got a support at $20 for APLD. So a lot of consolidation. If you do get a breakout, next target's going to be $40 for APLD there. It's amazing that stock market is the only place where people are afraid to take advantage of the sale. They prefer to overpay and then feel safer instead of buying when the product is cheaper. 100%, I agree. I'm limited with cash to invest more. I'm at 55% on Nvidia, $6,000. Does it make sense to sell Nvidia and invest in other stocks? So, good question. Depends on whether you have a better opportunity than what you already have. Because if you are looking at investing in other stocks, it has to be equal to or better opportunity than what you already have, Nvidia. And so that is the discussion that you need to have. It's not that I'm low on capital. Should I sell this to buy something else? It's okay, I'm low on capital. How can I add more money to the portfolio so I can buy more companies and more stocks? Selling a winner, an existing winner that you were up on 55%, just for the reason of investing in something else would not be recommended. It's something, the only reason you sell a stock is because you need the money for something personal, you need the money for a better opportunity, or you no longer believe in the company. Those are the only three reasons why you would want to sell a stock ever. So if none of those three criteria are met, you still believe in Nvidia, you don't need the money for personal reasons, for anything, let's say you're renovating the kitchen or you need to pay taxes or whatever. If none of those reasons exist and you don't have a better opportunity to invest in, I would just keep it. I would just let it be. Because when you do sell, you also trigger a taxable event. So, why do that if you don't have a better opportunity elsewhere? So, so long answer short, evaluate if that something else you're investing in is an equal to or better opportunity than Nvidia, given the current landscape, current valuations, current market, and current future. All right, so market's about to open in about a couple minutes here. Hope you all are doing great and are excited to see this market open and close for the year. And QQQs are slightly down. We've got S&P 500 slightly down about 0.5%. Volatility is moving higher. And we've got individual stocks, Nvidia slightly down, Meta down. It's great, Meta's down. Oh my God, I'm getting so much hate for essentially rooting for Meta to go down. Tesla's down 1.3, so trading back down to 469. And the big sell-off is happening in commodities. Silver and gold are the ones that are selling aggressively today. So seeing some profit taking right now. So a minute 30 left. Closing mega red, everyone for the hills. I think in the first few weeks of January, we could see some selling pressure because of profit taking and, just taxable gains getting pushed out another year. I think that is possible for the first couple. So here we go. A minute left. Can you please root for green Meta? It might actually happen then. I'll see what kind of trades Meta gives me. If I sell my next call at 690 or 700, sure, I'll root for a breakout over 675 or 680. But until then, man, I don't know what to tell you. Like, I'm just gonna keep selling calls, and if Meta tanks, which looks like it is, then I'll keep printing, and I'll keep repeating the process until proven otherwise. So if the market's giving me free money, I'll take it. I'm not leaving anything on the table here. It's the end of the year. Like, it's high stakes. We need to close the year strong. So, yeah, 658 is where we are at, almost 1% down. Sell it for 800, then it might get there. I might actually do it. I might do it for a year out, and then just sell a $800 or $900 call on Meta, collect all that premium. So markets are open, everybody. We are live with this last 3 days of 2025. QQQ's down about 70 basis points here. S&P is down 40. Got Nvidia down 1.8%, and Meta's down almost 90 basis points right now. Let me quickly open up and see how much I'm up on those Meta covered calls and see if there's an opportunity to close them today. If it's anything less than 50%, I'm most likely going to hold them. I'm up 30% right now. I'm up 30%, about $180. I could close them, but it's 30% only. Not enough premium yet. So there's still $400 left in that premium. So we'll see. I'll let another day or two pass and then decide what I want to do. But it's going to be extremely volatile, as it always is every week. Anyway, thank you so much for joining, everyone. Again, link's going to be down below if you're interested in taking advantage of the membership. If you want to join and, of course, be a part of the MoneyVest community, that's going to be available with the link down below. There is a 40% annual discount available until the end of this month. And again, happy holidays, happy investing. I'll see you all.